Well, this morning, investors are trying to game out the economic impact of this past weekend's U.S. strikes on Iran. Our senior economics reporter, Steve Liesman, joins us right now with more on that front. Steve, good morning.
Morning, Becky. Yeah, muted market reaction to the military action in Iran suggests the possibility of a muted economic impact, but it will add to the potential for greater uncertainty and inflation already created by tariffs. The result could be to further stay the hand of the Fed, which had been waiting for the haze of tariffs to lift before acting. An oil price shock, if we have one, can have a similar stagflationary impact as tariffs, raising prices and reducing growth, according to a 2015 study by the Dallas Fed. $10 more on a price of oil per barrel can reduce U.S. GDP by 0.1 to 0.2. And according to the IMF, that would increase or come with a 0.1 to 0.3 increase in inflation. But, of course, that doesn't appear to be happening now. Alex Manzera, he's a fixed income specialist or option specialist at R.J. O'Brien, writes this morning, it's somewhat amazing that almost no market is showing a net change from Friday greater than 50 basis points. Probabilities for Fed rate cuts largely unchanged. The chance of a rate cut for both September and December around 70%, where it was pretty much on Friday. Here are some of the oil price shocks that we've seen in the past. Iranian Revolution up 166%, the Gulf War 128%, all the way down to the Arab Spring. You can see it seems to get much more muted than it was in the past. Since 1991, it is hard to find an oil spike that caused an increase in core inflation measures, meaningful one, excluding food and energy, and that's what's closely watched by the Fed. Still, there remains concern. Joe Busuelas from RSM writing this morning, if short-term inflation expectations continue to increase, a real risk considering the events of the weekend, what should have been the continuation of the Fed's easing of interest rates could turn into a waiting period. Now, markets have to wait and listen closely to congressional testimony this week by Fed Chair Jay Powell, 2 days this week out in front of Congress. Powell's been wary of tariff impacts, and that could extend to his worries about a potential oil price shock. Becky?
Hey, Steve, I don't know what time period those oil shocks that we've looked at in the past. I guess the lowest one on that list was the Arab Spring. That was up 24%. But if you look at WTI over the last month, we're already up 20%. And that's because this morning we were talking about it with another analyst. We have seen wells that have been shut in, so the supply has come down. And that's just producers saying, hey, we're not going to produce it at these levels. It doesn't make sense. So you've already seen a pretty decent spike. Actually, it's 21% over the last month. And I guess that raises questions about how much higher it goes from here, people waiting to see what happens. But we have seen an increase over the last month that's pretty significant.
No doubt. And I think the problem with that, and we've talked about this before the weekend events, is that you have had some tariff impact in the CPI. That's been offset in part by energy impacts, which have gone down over the past month or so. There have been negative numbers on energy. If that reverses, the tariff impact could come to the fore again. That's the reason to stay the Fed's hand. But what I'm talking about, Becky, this morning was just the relative move when it came to a specific event. And yes, it is up as a result of beginning with the Israeli conflict and then what the U.S. over the weekend did. But in terms of the actual level, it feels like we've been here before, $73, $74, and not really that big an impact in terms of 80 or 100 or even higher, which is some of the worst case scenarios we were reading about.
Right.
Right.
Right. Yeah, I mean, it'll be interesting to watch. But the numbers that you cite, like with the Iranian uprising in 1979, that was up 166% from over the period of a week, over the period of a month. Like, how long are we talking?
Some of those happen very quickly. Some happen over a period of time. And sometimes they come down and sometimes they went flat. The bigger story right now, Becky, is there isn't an actual potential supply problem. And that's because we have so much domestic production right now. People don't worry about where that next barrel of oil, whether or not we're going to be short a barrel of oil. Of course, the Straits of Hormuz are a very serious issue if that closes. But right now, that is not the way the market's trading, for sure.